In today's video, we're going to break down the FIFO rule, the first in, first out rule. If you're trading in the United States with a regulated broker, then listen up because this rule applies to you. Today, we're going to talk about this very important rule that applies to those of you who are trading in the United States with a regulated broker. Now, I use Owanda. If you follow me and you see my daily trading videos, you know that that's the broker I've been using for a long time. I don't get paid to say that. I think that they're just a great broker that if you're trying to build a long-term safe, consistent trading business, Owanda is a great place to do that. I've never had any issues. And again, they don't pay me to say that. So that's like a free sponsor for them right there. Now, as you can see, I have a long position in on Euro USD. The position doesn't have a stop loss. It doesn't have a take profit because it doesn't matter for this video. The point that I want you to get out of this is when you're adding to a trade, meaning you've already made a decision, you've put one position in. This FIFO rule is going to come into play when you look to add to that entry, meaning take a second, third, or fourth position. So let me show you what happens when I go long again here, Euro USD. It's going to add, as you can see, another long entry signal. So now we have the 2 million unit order and the 49,000 unit order. And you can see them at the bottom of the screen right here in the bottom left-hand corner. Now, where this FIFO rule comes into play is here. When we want to get out of this trade, let's just say for some reason now we want to close it. Normally you wouldn't want to close a trade that quickly after taking a position, but again, we're just using this as an example. So remember, the 2 million unit position here, the bigger position, was my second position. So now when I go to close some of this, because it's a long position, I need to sell it to close it. Let's say I just want to close 25,000 units. When I hit sell, it's not going to pull from the 2.3 million unit order. It's going to pull from the 49,000 unit order. So when I hit sell, watch, the 49, you see it in the bottom left, goes down to a 24,000. So what it did there was it closed in units. It's looking at all of my units as a net position. If I click here, you can see all 2 million units as one position. It's going to close from my first entry price first. The only time it won't do that is if I come to the screen itself here, or if I go to the individual positions tab at the bottom here, and I close that second position individually on its own in its entirety. If you want to piece yourself out, that's where the FIFO rule comes into play, and the broker looks at your entire trade as one position, and it pieces you out from your first entry price. But if you want to just close the entire trade, like I just did, you can do that as well, whether it's the first entry or not. The FIFO rule only applies when you're closing in smaller sections of units rather than the individual trade. I hope that makes sense. So basically, one more time, if you have multiple entries on a position and you close the position in its entirety, that individual second entry or third entry, that will come out, absolutely. But if you're piecing out in units, meaning you have net long 100,000 units and you piece out 25,000, it's going to pull that 25,000 from your first entry, whatever price that is, first, and then progressively to the last entry. It's going to pull the net position that you take out. So again, it's always going to be first in, first out.